Good evening, everybody. Hope everybody's having a nice spring evening. As I said in the chat room, you could all wear your nice spring outfits tonight. Tonight, we got the great pleasure and honor again of having Rob Hoffman with us. Rob, and the reason it's a great honor is because Rob is probably one of, if not the leading trader. He's won over 17 domestic and international trading competitions. And the proof of the pudding is that these are real online, real money, domestic and international trading competitions, and he's won more than any other trader anywhere. Rob also offers his students a very unique live trading experience where the students are able to look over his shoulder and ask questions as he's trading live in real time. This is something that most traders will not step up and do. He mentors traders on how to use the same techniques he's using during all of the top trading competitions and does this right on the screen in front of him in his real live trading account. Again, this is something few traders will actually sit down and let people do, see what their actual trading is. Rob is the real deal. He is what I would call the professional trader's trader. So with that, we're anxious to see his presentation tonight. Rob, welcome to the Candlestick Forum. We're anxious to see this information.
Well, thanks, Steve. It's great to be here, and thanks, Becky and Jim, for all your help here this evening as well. And good evening, everyone. Hopefully you can see my screen and hear my voice okay as we get ready to kick it off here this evening. So as long as everybody can hear me all right, let's go ahead and get right into it because we have a lot to cover tonight. I'm going to cover one of these strategies that we've been using a lot and also show some videos of this in action if the system will allow us to do that here this evening. So with that being said, let's go ahead and get right into it. Before we start, though, it's great to talk about profits and successes and everything else, but there's also failures and trouble spots in trading as well. So I like to remind people of that. It's not just all reward and no risk. And so before you're doing trading, please consult your registered financial representative and your risk trading plan before ever trading anything. Then also, if you like trade options, there's some great courses out there. Like this website here, they'll tell you a lot about the risk profile of various strategies. A lot of misinformation out there about options, and this is a site you can go to get some straightforward facts from. So as we go ahead and we get into this, with all that being said, thank you. I was fortunate enough to recently come back winning the New York and Orlando Traders Expos over the last couple of weeks. So we're going to show you one of the strategies that I used to help me win those different competitions. And, so we got a lot to cover. This is my website. It's becomeabettertrader.com. I would encourage all of you to, go over here and get yourself signed up for my free nightly videos. There's a lot of great information. We've been covering a lot of really important topics in a timely fashion before things have been happening here in the recent past. So that's just a great place for you to go, a great resource for additional free information. I know Steve shares a lot of value with you guys for a low cost, and this is another great way to get a lot of value there as well. So it's just becomeabettertrader.com is where you can go for that. Okay. Now, there's a lot you can read about me here. We won't talk about this much tonight, but if you get the Modern Trader magazine, I was just featured here in the January edition. A whole write-up about me, some of my trading methodologies, my trading screens, and the tools and strategies that I go ahead and I use. And so you can read that. But in the end, what I like to remind people is I was just like you. These were the actual books that I checked out from the library when I was a teenager. And and then of course built up this library of a lot of stuff over the years. And but these were the original books I had. How to read the Wall Street Journal, gang. That's things like that. How to read the Wall Street Journal was the things I was learning when I was a teenager. So I was just like you, trying to figure out my way through this whole process. 3 jobs. I had 2 full-time and 1 part-time job, so I'm very sympathetic to all of you that have jobs, second careers, have families to take care of. I know exactly what that was like. I had 2 full-time jobs in law enforcement, and then I went ahead and also worked for a part-time Podunk Police Department as well. And so consequently, I went ahead and meanwhile, I was raising this guy. This isn't me, gang. This is my son. I'm very proud of him. He's a United States Marine. Stationed here in the United States helping American citizens, and so I'm very proud of him. And I still know what it's like to be busy running an international company, trading with my students each day, and trading these competitions around the world with real money. This is also another thing that keeps me very busy these days. This beautiful little girl and her 2 guardian angels right there. And so her name is Mackenzie, and she is just lovely. And I'd like to make another announcement. We have another baby on the way. I can't tell you the sex of the baby because we just found out, and our parents don't even know yet, but we have another baby on the way, and I'll be able to let you know what sex that baby is as of next Monday. Yeah, thank you very much. Thank you very much. That's very nice of you. So I'm very excited about that. So, gang, I'm just like you in the end, and that's what it really boils down to. But what I want to do with you is try to share some of this important knowledge that the only difference between you and me, I put my undies and my socks on and everything else just like you. I'm just like you. But the difference is I have some knowledge that you guys need to know and understand, and that's what helps me win these trading competitions around the world. I've got a lot of different strategies. I'm going to share one of those with you tonight. Just won the one in Orlando here a couple weeks ago, and about 3 weeks ago, the one in New York, an international one last December, and many more. So as Steve said, about 17 different real money trading competitions all over the world. So really great stuff there. So that's what makes me, different, and why it's important to share this information with you. And a lot of people at these money shows like to go ahead and, thank you very much. That's very nice of you. Appreciate that, gang. So what I'm going to do is, just like I've been helping these people at these money shows and stuff like that, I'm going to help you here tonight. And again, for additional information to keep the education going after this, you can go to becomeabettertrader.com to just get those free nightly videos, as I said there as well. So that'll help you out. Some very timely information about these markets. So with that said, these trading competitions, this is what they look like. Usually a couple hundred people packed in a room to watch me trade live against 1 or up to 16 trading competitors. That's what these international ones are like right here. So, these people are coming for battle. I mean, they're bringing 23-inch monitors. They're bringing multiple computers. And then here's me with my one computer, trading against these professionals from all over the world. They're highly regulated. You can see the judges standing over us. Kind of an intense deal here. So pretty exciting. And we've been able to fortunately go ahead and have some pretty extraordinary profits during some of these events as well to separate me from some of the other traders. So really great stuff. This is actually my equity curve during the trading competition in Italy. So in Italy, they kind of show that whole thing live as it's going ahead and happening. So I made a lot of money, made some money, made a lot of money, and then started scratching there. And so then I went in and I stopped. So, that was my actual equity curve during the international competition in Italy. And by the way, that's my equity curve this year. So I'm very proud of that. So hopefully some of the things I share with you tonight will help you in that endeavor for yourself. So let's get into the strategy that I want to share with you here this evening. So this is called the Hoffman Inventory Retracement Bar. Now, I've written about this in international trade magazines, trader magazines like Trader Magazine, which was published in 5 different languages. I also speak to retail and institutional clients strategy. So hopefully this will be a really great one that you can start practicing with here, as soon as you leave here this evening. So what is this setup? It's a price action based trend continuation trade. Okay, basically what's happening in a nutshell, in a downtrend, I'm looking for bars that pull back 45% or more off their lows. So the bottom portion of the candle, so here's the bottom end of the candle, the top of the candle, and everybody here should be very familiar with candles. Both Steve and I both are avid fans of candlesticks. So hopefully this will be something not foreign to you at all here this evening. And so what I'm looking for in a downtrend, is where from the open to the close, that basically the bottom end of this wick is 45% or more off the low. So that means the bottom end of the candle is 45% or more wick. And you can see these are 4 individual unique examples. This one here is like 90, 95% off the low. 45% or more off the low, 45% or more off the low, 45% or more off the low. In a uptrend, I'm looking for just the opposite. I'm looking for bars that are 45% or more off their high. That means the open and the close is in the bottom 55% of the bar. Okay, very important strategy. There's a whole institutional theme that's taking place around this, which we're going to go ahead and talk about more in a few minutes. So when do I use this? It's most effective in trendy markets, and it's even better when tied to strong fundamental analysis for investors. Many of you here have gone ahead and found a great fundamental story on your favorite stock, and you went ahead and you placed a trade only to sit there for days, weeks, or months on dead money or worse at a loss, waiting for Wall Street to discover the same fundamental story. So if you could take a great fundamental story and combine it with an excellent technical trading breakout to time it better, you become basically a techno-fundamentalist, and that is much better for you as a trader and investor. So how do we identify this setup? Looking back over the last 20 periods, and this is very important, gang, 20 periods, because I use this on an intraday basis and during trading competitions and in my live trading room on 2-minute, 5-minute, 15-minute bars. If you're a swing trader, you're using this same strategy on daily and weekly bars. Okay, so looking back over the last 20 periods, so the time frame you're looking to trade, we're looking for these things called signal bars, which I just introduced you to for a moment ago, where the open and the close are approximately 45% or more off their high in an uptrend, or 45% or more off their low in a downtrend. So basically we're asking ourselves, how much wick is showing? Is it approximately 45% or more? All right. So once again here, in a downtrend, I'm looking for a daily bar if I'm trading off daily charts, a weekly bar if I'm trading off weekly charts, a 2-minute bar if I'm trading off a 2-minute bar. You get the story there. I'm looking for the time frame that I'm looking to execute a trade. I'm looking for a bar that's 45% or more off the low in a downtrend, or 45% or more off the high in an uptrend. What's basically happening here from an institutional perspective, it's important that you understand what's happening here. When we think about, let's think about Apple for a second. Apple is going up, up, up. Now, all of a sudden, out of the blue, Apple stops and actually is driven back down. Is that you or me going ahead and stopping Apple from going up and actually driving it down, gang? Is that our order flow that's causing that to happen? Or is that the big institutions? It's absolutely the big institutions. When Apple was a $500, $600 stock, I was going ahead and doing 1,000 share blocks of Apple. And I'm here to tell you, never, ever, ever once, never, ever, ever once did it go ahead and did my 1,000 shares of a $500, $600 stock of Apple, never once did I move Apple off the bid or the offer with 1,000 shares. You see what I'm saying? And so basically what I'm looking for when the market is not only stopped from going up but actually driven back down, that's significant to me. In that uptrend, that means one or more institutions it could be one person within a firm, it could be several, is temporarily come in for whatever reason, and we don't care what the reason is. What we do care about, though, is that they've temporarily stopped the up move and driven it back down 45% or more. 45% or more. In a downtrend, we want them to drive it back off the lows 45% or more off the low. The key is, though, we're in a trend. Okay, this is the key. We want to be in a trend. I'll show you how to identify that in a few moments. Okay, so where's my entry? It's typically 1 tick or 1 cent above or below the signal bar. This is a great strategy whether you trade stocks, options, futures, ETFs, Forex. This whole thing is the same thing. Okay. And so there's some great questions coming up. I think I'll go ahead and take those in a little bit, okay? Because you guys are asking some great questions, and but I'm going to answer some of those as we go along, and the ones I don't, I'll be happy to answer as we go along, okay? Or as we get towards the end. So we just got so much to cover for you. So basically, though, the entry is 1 tick or 1 cent above or below the signal bar. And by the way, I appreciate all the great questions you guys are asking, your active participation. You guys are great. So what happens is that means now the market's in a downtrend. We're looking for this bar that's 45% off the low. Now, what I want to have happen is I want it to now break back down below this low by 1 tick or 1 cent. That's where I'm looking to put my order. Okay, and I'm going to show you lots of examples of this. I'm going to show you some videos of this in action as well. Okay, so you guys sit tight. We're going to have a lot of fun with this. So in a downtrend, I'm looking for us to go ahead and open up. So we open up here, go up, come back down, come back off the low, and then I'm looking for future bars within the next 20 bars to break down below that low. Okay, and that's where I'm looking to short. So what I'm looking for is effectively is where that one or more institutions temporarily had inventory to go ahead and buy or sell against the predominant trend. Okay, and then once their order flow has dried up, the market is free to go back on board the original direction it was going. Okay, and that's the kind of trade I'm looking for. In an uptrend, I'm looking for just the opposite. I want that bar to be 45% or more off the high, and then I want us to push back above the high, and I want to go long 1 tick, 1 cent. Okay, and of course, if I'm looking to put my favorite options trade on, if Steve identifies a great equity play for you, but you like to trade options, well, then you get a pattern like this. What happens is we break out above that. Well, you can buy calls, you can sell puts. So any one of your favorite bullish strategies to go ahead and put on a breaking out above there. All right. So where's my exit? Basically, it's a trailing trade or to the next support resistance level. I typically go ahead and like to trail. Here's my personal trailing stop methodology. All right, so what happens is I put an order out there. I enter the trade. Now, before I do that, though, I'm determining a target out into the future. This here happens to be a currency trade, but it doesn't matter, like I said, whether it's currency, stocks, equities, or it's equities, ETFs, futures, it doesn't matter. What happens is, though, it's important to determine your target in advance. And that can be like, for instance, I use daily, weekly, monthly pivots. You can use a Fibonacci extension number. You can use a key previous support resistance number, or it may be something as simple as a long-term support or resistance level on your daily charts. This is my daily chart. Setup. This is a 2-minute, 5-minute, 15-minute, hourly, and then here's my daily. And for swing trades, I'm using daily and weekly charts. All right, so an entry is taken here. That's what this is right here. Now, here's the target up here. So here's how we trail, okay? Once we go ahead and have gotten about 50% to the target, 50% to the target, we want to start trailing by about 50% of profit earned. So in other words, that's basically locking in 25% of the overall anticipated move. Why? How many of you here have ever gone ahead and had a great trade working for you? You did everything right. You found a great trade. You wanted just a little bit more profit on the trade. It comes up near your price, misses your target, and rolls right back over and becomes a loss. How many of you here have ever had that happen to you? It's a terrible feeling, isn't it? Exactly. All right, and there's nothing worse. My biggest loss in my trading career was a result of a trade where I had a nice profit on the board, but I wanted about $8,000 more on the trade. I'd had this huge run of big days, and I wanted more. I wanted more out of it. Okay, and so what I found was, after learning from that experience years ago, I found, hey, you know what? What the compromise is, have a target out into space, but go ahead and trail the profit behind it so that you don't turn that winner into a loser. Does that make sense, everybody? So initially, it gets about 50% of the way to the target, start trailing by 50%. Then, as we get up here about 80% of the way to the target, start trailing about 80% of profit earned. Then, as we get up to the target, start trailing by about 90% of profit earned. And then when we see that it's just not breaking through, because only 1 out of 10, 1 out of 12 times does it typically break through. And when it breaks through initially, it's usually a false breakout. It breaks out, traps retail traders, rolls right back over. And actually, we saw this in living color at my trading competition in Orlando here a few weeks ago. I warned everybody about what I was concerned about and why I was not taking the breakout, because it started breaking out above a previous high. And I said, watch, I think this is going to roll right back over, and I'd rather take a long on the pullback, which is what I did. It was one of the 3 trades I took to win that competition. And I effectively took virtually no heat on any of those trades. It's like 1 or 2 ticks of heat before it moved my way, timing those very well. And so what happens is then you get up to the price, okay, you get up to the resistance level, and so you're trailing about 90%. And then what happens is when you see it's not breaking through, then trail it right up to price. And if it happens to be that 1 out of 10 times, then great. So what happens here is then when it doesn't break through, just takes you out of the trade. Okay, so that's kind of my trailing stop methodology. It's designed to try to maximize the opportunity, but then as we get to key resistance levels, tightening up that profit so we don't turn. I mean, because isn't it criminal to have it go all the way up there, right? It goes all the way up there, and then yet you keep your profit way back here or back over here, and then you give all that back. So it's a nice way, it's a graduated way to try to lock in as much profit but give it a chance to run. Does that make sense, everybody? So that's kind of my trailing stop methodology there. Now, where's the stop loss? It's going to be 1 tick or 1 cent below the low or the high of the signal bar or predetermined loss value, plus a little bit of secret. So what happens here is, remember, in a downtrend, we want this to pull back 45% or more off the low, and then we want it to roll back over, break down below, and then that's where I'm looking to short. Well, the stop loss is going to be 1 tick above the high of that same signal bar. So we go ahead and we enter once it breaks down below, but then if it gets back above the high of this bar, something has fundamentally changed to this, and it could be an actual reversal in the market. So stop loss is there. But I'll tell you a little secret that usually it won't even get back above about the 60% level of that bar. If it's going to pull back a little bit and then roll back over, it usually stays within the first 60% and then rolls back over. Okay, so it shouldn't even get above the 60%. So chances are, if it's going to go above the 60% level, it's going to go all the way back up to here. Okay, so that's and then same thing on the upside. So remember, in uptrend, we're waiting for it to pull back. Then we want to get long as it pulls back trend 1 tick or 1 cent above the high of that bar, and then that means the stop loss is 1 tick or 1 cent behind the low. But in the real world, it generally shouldn't even get back beyond the 60% of the bar before actually pushing through. Okay, so a couple things to remember about this concept. Think about the concept of rocket fuel. If it's moved a large range quickly, the breakout is likely to fail, at least temporarily. So what do we mean by that? All right, well, we go ahead and the market's coming down. Look at this big, long bar. Let's say the average true range on the bars you're trading on your favorite daily, weekly, or 5-minute chart, doesn't matter. I use the strategy on all those. If you're going ahead and your average true range on the bars you're trading is like this, then all of a sudden you get this big wide range bar like this. Well, let's remember now, where's the official entry on this big bar right here? Is it up here? This is a downtrend, so is it up here or is it down below? It's down below. And so that means now this bar opened up here, goes all the way down here, comes all the way back up here, but before we take the short, it's got to go all the way back down here again. Well, that's using up a lot of the profit we're looking for on the trade. So typically what I find happens in these bars that are 2 or 3 times the normal average true range of the bar you're looking to trade, typically what I find, gang, is that what happens is when we're looking to short it, comes down here. It'll either come down to that price or just a few ticks below. Then it will bounce back up, and then it will roll back over, and that secondary break tends to be a more reliable continuation. So if you get this big 2 or 3 times the normal average true range bar, and you have to travel a great distance, remember, just keep in mind that's running out of rocket fuel in the short term. That's your profit being burned up there. It's far more likely it's going to have some sort of initial bounce and then roll back over. So keep that in mind. Also, this has very diverse applications. It doesn't matter, again, whether you're trading stocks, futures, options, Forex. Very diverse across time frames, as I've proven both in my trading room and the international trading competitions, and then also on daily and weekly charts for swing trades. Also, from my perspective, don't forget to trail your entries to reduce the risk of RTM. That's reversion to the mean. Okay? And so then, one other thing, trade in the direction of the BBT Pro Trader Pack, or for all of you here that aren't already students of mine, no worries, trade in the direction of a basic 45-degree angled 20-period exponential moving average. Okay, so just use a simple 20-period exponential moving average over the last 20 bars, and try to keep that at roughly a 45-degree angle. I'll tell you a little secret here. The more you flatten that out, the less reliable that trade is going to be. Because really, remember, this is a trend continuation trade. This is a trend continuation trade. So with that being said, you want a trend. The more shallow you make the angle on the trend, statistically, the higher failure rate you're going to have on the trade. Okay, so something to keep in mind there. So here's what we're looking for. We go ahead, we have a downtrend on that 20-period exponential moving average. That's that black line there. And then what we're looking for here is bars like this, 45% off the low, all right, or more. Now, so that means right now I want to take the short right here. But wait, that hasn't happened yet. While I'm waiting for that to come about, we actually get another one that locks in right here. Okay, and by the way, I'm going to show you videos of this in a little bit here as well. Assuming the system doesn't crash. So the right here, 45% off low. So now I want to actually short 1 tick or 1 cent below the low here. But then we actually get another one that locks in right here. So that means actually the initial entry is 1 tick, 1 cent below that bar. All right, so there it is right there. And then you can see once the market broke down below that, it whooshed to the downside. Now, this whole concept of whooshing is extremely important because remember now, we're in a downtrend and we have one or more institutions that's temporarily got inventory to buy. So it's real important that you understand this. I want you guys to all think as the hunters, not the hunted. All right. So for whatever reason, one or more institutions is putting out orders to buy. They could be covering shorts. They could be thinking that we're closer to an overall bottom and near a major market reversal. But there, for one or more institutions, is temporarily reversing or holding the market back up. Now, what happens here then is once we break down below that inventory, the market is free to go back on board the original direction that it was going. And when it does that, expect that it's usually going to do it very aggressively. So think in the terms of a whoosh. And I'm going to show you lots of examples so that hopefully I instill that, because I want you to have an expectation of what you should see if this is doing what it's supposed to do. So in this case, it finally gets down below that 45% off the low bar here, and it whooshes to the downside. All right, now it starts to go back up. Well, let's take a look here. We've actually got the bars here making another 45% off the low bar. What does it do when it breaks down below there? It whooshes to the downside. Okay. Now, a little bit later at the end of this, I'm going to show you, just briefly introduce you to the concept of some other great training ideas as well. But this over here, all right here, this is all the different rules put on one slide. So I believe you're going to get the recording from this tonight. So hopefully you can go back then, or you can take a screenshot of this real quick. But this is like all the different rules put together. Okay. Now, couple of things to remember here before we move on. Don't forget you can go to the front page of my website and get access to nightly videos here, becomebettertrader.com, and just fill out this little section right here so that you can get access to videos talking about the market each evening there. All right. And so then in summary, what we're looking for is going to be these bars that are 45% or more off the low in a downtrend, and then we want to short below the low of them. Or in an uptrend, we want to go ahead and find the bars that are 45% or more off the high and then break above the high there for an entry. So let's start looking at charts and looking at examples of this and see what this all looks like as we bring it all together. Then we'll look at some videos of this as well. So right here, this is a weekly chart of Apple. This is a daily chart of Apple. Okay, I like to show this one because this is one of the private charts I show my institutional clients, and so it's one of the ones I show publicly to my retail clients that I share privately with the institutional ones. So what happens here is in a weekly, we're looking for a downtrend. This black line here is a 20-period exponential moving average, and we're looking for bars that are 45% or more off the lows. Then what we want to do, and notice what happens here, gang. Initially, the market starts going up from that bar. Well, notice what happens when it comes down. This is very important that you understand this. Very important that you understand this. What does it do? It sits there for 2 weeks right there at this level, because from the bottom of the channel to the bottom of the wick to the top of the wick is one big fat support level in a downtrend. Why? Because that one or more institutions still has inventory in this area, okay? So it sits there for 2 weeks as it continues to eat through that inventory. It's very important that you understand that. So look what happens when that one or more institutions inventory finally breaks down, that they have no more inventory to buy. What did the market do that week? It whooshed to the downside. It dropped another $30 that week. All right. Now this brings about 2 important points. Number one, that's why it's so important to make sure we get through that level so that inventory is no longer there. And it also brings, so that's why we wait till it gets down below there to go ahead and short. And then it also is why it's so important to identify a key support or resistance level. Like in this case, an obvious place is going to be a round number support or resistance level to go ahead and trail the trade down so that you're not caught in the reversal. If you trail this down, then you have a real opportunity to make very good money on the way down. If you go ahead and you don't trail it down and you just kind of let it sit up there expecting it's just going to go down forever, then basically it's going to come back and take away all that wonderful profit. Another shining example why it's important to trail. Now, the next question is, okay, so you're stopped out of this trade with your profit. What happens when we get the next opportunity over here? Can we still go ahead and take this trade over here? So here we have another bar. It's 45% or more off the low. Can we take that trade, or are we done because of the trade was already taken over here? The answer is absolutely. As long as we continue to be in the downtrend, we can still take trades. Okay? So where's that entry taken? Okay, and let's also talk about the stop loss, by the way. Remember, the entry is taken down below here. Where's your stop loss? It's 1 tick or 1 cent above the high with a dirty little secret. The dirty little secret is that we actually, if it gets back above the 60% level of that bar, it's more likely to become a full stop loss, right? So the entry here is going to be 1 tick, 1 cent below the low of that bar, and then we trail it down. Okay, and you can see what happened here. It went from 440 down to about the 390 area. So over the next 3 weeks, it dropped over $50. Okay, now at the same time, the reason why I like to show this is because I actually, back when this was happening, I was sharing this in those free nightly videos that I invited all of you to go ahead and be a part of here just a little bit ago at Become a Better Trader. So I shared this as this was happening right over here in my nightly videos. Okay, so I have the public record of it. You go back and watch all these past videos here and see what I say and then how it happens afterwards. And so what happens here is, and that's great information for you to have as you're making your decisions. At least you have another professional opinion to bounce it off of in addition to Steve's. So so what happens here is, now this is the same time frame. This is a daily chart, and this is fractal. This is the same time that this was happening over here. This was happening over here, gang, all right? And so what happened was, you could see we were in a downtrend, and then this bar was 45% off the low. What did it do for the next 3 days? It sat there right at that level, eating away at those orders. Sat there for 3 days, eating away at those orders. And then what happened when it broke down below? It whooshed to the downside aggressively over the next several days, didn't it? Exactly. So really great stuff there. That's real important that you understand that. So the expectation when we break down below those levels is a whoosh. Now, so what happens here, so you get in, and then it's coming down, and because you're trailing back behind it, it stops you out. Well, so the question is, can you get back into the trade? And the answer to that question was yes, right? You can get back into that trade as long as we're still in a downtrend. Okay, so you get back into that trade. You can get back into the trade as long as we're still in a downtrend, and then you keep trailing down. Now, the question is, what about right over here? Is this an opportunity right over here? It's 45% off the low. So what do you think, gang? It's 45% off the low there. No, yeah, it's not in a trend at that point, flattened out. Very good. Yeah, you guys are doing great. Okay, so we have a trend on the 20-period exponential moving average. We could keep looking for these entries. We flatten out, well, then statistically we lose our advantage. All right. So as we look at this one more time, we're looking, and then we're going to show a lot of more examples and videos of this as well in action, in live trading accounts, by the way. So the market's going ahead and pushing down. Now we're looking for the bar that's 45% off the low. So this is our initial entry. We're just waiting for it to hit that. But wait, another signal bar locks in while we're waiting for this one to hit. Another one locks in. So now we move our stop up, or buy our sell stop up to here. And then while we're waiting for that one to hit, we actually get another signal bar that locks in. So now the entry is down here, or is up here. And so it hits that, and what happens after it hits that? Whoosh to the downside. And this move just here on these bars, this is a 5-minute intraday bar here. It doesn't matter. It's a daily chart, same thing, 2-minute chart, all the same thing. But this basically moved down there over the next 15 minutes, 80 ticks. That's the equivalent of 800 US dollars just over that 15 minutes. And then what happens is it pulls back to the upside here, and then it rolls right back over and then starts to spike back down again. Okay? So let's talk about something. I want you to think more like the hunters, not the hunted. So I want you to go ahead and think about this institutionally. Here's what's happening. This is really important. 3 things are happening that's so important you understand. Number one, these trades are distracting sellers from wanting to sell. They're giving these setups that are happening, they're giving buyers false hope who went long up above, and it's stopping out the late sellers who need big, fast bars. So let's take a look at that again. All right, so the market's coming down, coming down, coming down. Well, then we see these accumulation bars, these inventory retracement bars I was telling you about. Well, so now what happens is if a trader went short down below and then it starts whipping back up, well, a lot of times, in fact, how many of you here, how many of you have taken a trade short or long, doesn't matter, no sooner do you get in the trade, it goes back against you just far enough to stop you out, you lose money on the trade, and then it comes right back down your way and would have been profitable. Exactly. Okay? Exactly. And so what happens there, so that's one of the first things. The traders who get in there late, it goes ahead and they have to now sit through that loss, all right, only to watch it come back their way. Now, how about the trader who's already taken a loss like that? Well, then the next time, what happens is the market's coming down. They say, I'm not going to get into that late. Last time I chased it, I lost money. So now they watch it start to go back up, and then they sit there and they say, see, I knew it was going to go back up, and then they stop looking at it. How many of you have gone ahead and identified a great trade? It started to move temporarily against the way you thought it was going to go, so you stop looking at it. You go off to another stock, you go off to another location, look at something different, looking at a different time frame, a different instrument, whatever it may be. Next thing you know, you come back a little bit later, whether it's a few minutes later, a few hours later, a few days later, whatever time frame you trade, and it went way further the way you thought it was going to go. And it's like, I knew it was going to do that, but you missed it because it was temporarily going the opposite direction you thought it was going to go, and only to go ahead and come back much lower. How many of you does that fit? Again, unfortunately, yes. Okay. So, yeah, great. So you guys understand what I'm saying. And then finally, last but not least, unfortunately, how many of you thought a market couldn't go any lower, and so you went ahead and you bought, and then unfortunately it did keep going lower, and then what happened was the market temporarily started going back up, and you found yourself cheerleading the trade, so you're like, yeah, go back up. And so it started going back up your way. You found that you were cheerleading the trade, And next thing you know, when you could have taken a small loss, it rolls back over and then becomes a much, much bigger loss. And of course, the whole time you're hoping that it'll just come back and become that small loss again, and instead it becomes a much bigger loss. Okay, well listen, hey, I thank you for your honesty, because when you're honest about it, it helps me. You've been looking at my trading statement. Yeah, unfortunately, see, this is what I'm saying. I win these trading competitions around the world. I understand market dynamics. I teach retail and institutional clients alike. I have tons of them in my trading room. I work with them. I travel all over the world teaching them. And so these are important strategies I want you to understand to help make a difference in your trading. Okay? So those are the three things then, getting back to these institutional mistakes that we're talking about. Distracting the sellers from wanting to sell, giving buyers false hope, and stopping out the late sellers. Okay? So if you understand this trading setup of mine, I'm basically waiting for those things to happen, waiting for the market to be going down, pull back up, and then resume the trend, and then get back on board when the market's really starting to accelerate. Okay? So that's the concept there. So now let's look at some actual international trading examples of mine. These are actual ones I used to win international trading competitions. So here the market was starting to come down. We went ahead and had the bar that was 45% or more off the low in the downtrend. It broke down below, and then as you can see, it actually these are 2-minute bars in this case. This is an intraday chart because obviously it's a trading competition over in Paris. And the market went ahead then, and as you can see, over the next 6 minutes, whooshed to the downside to the tune of over 500 US dollars. It was actually more than that, is how far it went. So there's an example of that. Then we see another example. Now this was a fun one because you remember in the picture I showed you from the trades in the trading competition earlier, we have all those judges standing all over us, and so I'm sitting down. You got to call out your trades live. They got to come over. They got to verify the trade. They got to write the trade on the screen. They got your screen up there to show. Well, what was nice is when all that crazy stuff was going on, here was this downtrend. Here was the bar is 45% or more off the low. What I was able to do with about 18 minutes to spare was tell people, hey, I'm putting out a sell stop here to go ahead and get into this trade. And then I was able to wait for it to come back and then roll back over and then break back down. And what did it do? When it broke back down below here, it whooshed to the downside, didn't it? Okay. Now, there's some other really great trades in here I'm going to talk a little bit more about here towards the end of the video. But in the meantime, I want to focus on this one strategy here for now. And so what did it do when it broke down below that inventory retracement bar? Whoosh to the downside. So then I trailed it down, took my profit. Then another one kicked in right here, and so I went short again, and then you can see it whooshed to the downside again. Okay? These are actual live real money trading strategies I took with real money in real international trading competitions to help me win them. Okay, so then here again we got another one. It's hard to see, you can't see the channel in the backdrop, but you can see that it was coming down a little bit there. So here was another one of these bars, 45% or more off the low in a downtrend. It broke down below the low, and what did it do, gang? It whooshed to the downside, and then I've trailed my profits. Okay, so let's go back and look at this chart again. So here now, we're back to daily and weekly charts. Here's a weekly chart. Here's a daily chart. So let's look at this again. Now you can start to see a little bit easier. Here you got that 20-period exponential moving average. We got 45% or more off the low. We're waiting, and you can see that initially when there's a lot of inventory there, especially on these big stocks, you'll see a lot of inventory there. It could sit there for a week or two. And then when it finally breaks through, we look for the whoosh. Okay, then it comes back up, smacks into that 20-period moving average. Then we make another setup bar. And then we're looking for it to break down below, and then it whoosh back down below again. And this was very fractal because as this was happening on the weekly chart, this was happening on the daily chart here. As it started to roll back over, the same setup happened on the other time frame. So really great stuff. All right. And by the way, like I said, some other great strategies here we'll kind of talk about towards the end that can really help you as well. So remind me, I'll share that at the end. So let's take a look at this now in an uptrend. Okay, this was Apple after the split. I like to talk about this because, again, you'll get access to those free nightly videos I offered you earlier. I talked about this as this was happening. So here we had an uptrend. You can clearly see that wonderful uptrend. And then we have the bars that are 45% off the high in the uptrend, 45% off the high or 45% off the high or more, an uptrend. Look what happened when we got through each of those, gang. Look what happened. What do you see there? What do you see happen after these? Really took off to the upside, didn't it? Okay, so that's what we're looking for. We're looking for that's right. Great question. I'll take that one now. I'm much more interested in the wick than the body. I don't care if the wick is or the body is red. I don't care if it's green. What I care about there is that it's 45% or more off the high in an uptrend or 45% or more off the low in a downtrend. I don't care if it's red or green. What I do care about, though, is what I was telling you about rocket fuel earlier. That does make a difference to me. All right, now this is great because this strategy I'm going to talk briefly about at the end of the night here is a whole other strategy. But right here you can see what I was just telling you about a few minutes ago. So here we have this beautiful downtrend. Then you can see the bar, it's 45% or more off the low. Can you guys all see that right there? 45% or more off the low. What did it do as it broke down below the low from there? It whooshed to the downside. So I was over in Barcelona, Spain. I just got done teaching this strategy, and then I turned right around and took this trade, just one simple contract there in the stock index futures, and then it whooshed to the downside there, made about $250 gross profit there, minus a few bucks for commissions and taxes and whatnot. But right there, I went ahead and I went short off the, using these trading strategies I'm talking about tonight, and then it whooshed right down. But can you see it? So it gets down below the bottom of that inventory retracement bar and whoosh, down the pipe it goes. Okay? So let's go ahead and take a look at these trades in action here. I'm hoping this won't crash the system. We had a little bit of a crash earlier there when we first started this evening. But let's take a look at this. And so here's what we're looking at. So right now you can see here that we have a downtrend in these charts. Now, if everybody could take a look, do you see this bar right there? That's 45% or more off the low, isn't it? See it? 45% or more off the low. Okay? This is real important. So hopefully as you're paying attention to this here, so you're going to see this in action now. All right, so let's go ahead and actually move the video forward just a little bit here. Get it kind of going. All right, so now it's starting to trade there. So watch what happens. Okay, so it breaks down below the low. This trade is entered. All right, so then what happens is, watch what happens. We'll kind of fast a lot of things to cover for you tonight. The market continues to go ahead and break down, and then you're trailing the profits. Okay, so remember, what's happening down below, we've got other inventory retracement bars we're about to smack into. So those are support until broken. So that's a key support level. So that's why the trailing is taking place here. All right, the trailing is taking place, and so that's what's happening. So you notice that this is being trailed because your supports down below. Does everybody see that? Because inventory retracement bars down below are key support until broken. All right. So that's what's happening here. So it broke down below this one, but now it's smacking into support down below. So that means we want to trail the trade. We don't want it to snap back and take back all of our profits, right? All right. So that's what's happening. Let's just move this forward a little bit, and then what you'll see is because there's the trailing stop is right back behind there, and then you're going to see it's taken out for the profit. All right. Let's go ahead and look at more examples of this. Okay. See if we can get that full screen. There we go. All right. So now here we have an uptrend in place, and now you have another inventory retracement bar. You actually have a couple of them right there in the uptrend. All right. So we go ahead. Good. I'm glad this is making sense. So we go ahead and we have now fresh inventory retracement bars. Okay. And so what happens here? So then, as we're breaking out of those, new trades are taken here. All right, so this is all live. For those of you that have the TradeStation, you can tell it says simulated on simulated accounts, right? So these are in live accounts being taken. So watch this. Okay, so now it's pushing up there, and then the stop is the profit's just being trailed as it's whooshing. Right, you guys see it? It's whooshing to the upside. Okay, is this making sense? So the inventory retracement bar is broken down below, and now what's happening is it's whooshing to the upside, and a trailing stop is placed in here. You guys following this? Until it's taken out with its profit. Let's take a look at another example. Good, good. I'm glad it's making sense. Let's keep going here. I just want to show you. I want to get these through to you. Show you different examples here. All right. So here's another one. This is another live account that this is being taken in here. Okay, so it's a little bit harder to see this one, and I apologize, but this bar right here is an inventory retracement bar. You can clearly see the downtrend that's in place here, right? So you can see the downtrend, and then everything, all my other indicators are in a downtrend as well. The 20-period exponential moving average is in a downtrend. We've got the inventory retracement bar over there, and so what happens is it breaks down below the low, so the short is placed over here. Okay, then an initial protective stop is put in there, back behind there, and now let's just go ahead and walk it forward. Okay, so it starts pushing down, all right, and then we go ahead and, Marcus, we're actually in the process of putting those together and developing those for people, actually. So look what happens. The market's whooshing to the downside. You guys seeing that? It's whooshing to the downside after it breaks down below that inventory retracement bar. So then the trailing, there was already 30 ticks of profit. That's $300 a contract on the board. So the current profit on the current trade is being put in right down here. You can see it right there as it's growing here. So it whooshed to the downside, and then the trailing stop is just taken, and you're trailing it down, you're trailing it down, trailing it down. Okay, and you can see here now there's about 60 ticks, 61 ticks there of profit. Then the trade is going to snap back. Okay, out, and so there's 30 ticks. So it's a total of 55 ticks. That's $550 total between the two contracts. Okay, that's another stock index futures trade. So really great stuff there, gang. So that's what they look like. You're looking for a trend, then you're looking to break down or break. Remember, until that level is broken, that key support or resistance is a big fat key support or resistance level. In fact, the trading competition, I was trading against a big institutional guy. He owns prop firms in London, Israel, and in Florida. And so he and I were trading against each other in Florida a year and a half ago. And what ended up happening was I told people, hey, look, I'm long, but there's a big fat inventory retracement bar right above us, so I'm going to get out because I'm concerned that until it's broken, it's resistance, and so I'm going to trail it up and get out of that trade. And I did. I got out of the trade, and then the market rolled right back over to the downside, so I locked in my profit, won that trading competition because I respected the fact that that area is resistance until broken. In fact, take a look here. You see it tried to break out, failed. Tried to break out, failed. Tried to hit that area again, failed. Tried to break out. In fact, that whole morning, it never broke back above that level, did it, gang? Okay. No, I tend to move my trailing stops manually there. Okay, and so basically, let's bring this back a whole different way now, because these are really important strategies and what all this means to you. When I was that guy in that police uniform, having the two full-time jobs, the part-time job, raising my son, I never could have imagined that one trading for a living, I'd be speaking to Steve's group here, teaching traders all over the world to trade, have won all these real money trading competitions against top traders hand-selected to be there to represent their countries around the world. So, really, in the end, I'm thankful. I'm blessed to be here with you guys right now. I also appreciate you guys coming to spend this hour with me. So let me tell you a little bit more about my trade setups and how you can start using them now. First of all, you can read like this article in Modern Trader magazine from January. That will shed some light on some of my work and my methodologies and that. Then, of course, obviously, I've been fortunate to win all these real money trading competitions all over the world, 5 international, 12 domestic ones. And what that means is I have some things to share with you that you really need to know. And that's what I've already started to try to do with you here this evening. So it's great. Everybody talks about trading in the education side of this business. As Steve said at the beginning of this, I'm one of the few guys that's actually out there doing it and consistently winning these trading competitions around the world. This was my equity curve during the Italian trading competition. It's also my equity curve here in 2016. It's phenomenal. And of course, we've been able to do some incredible things during some of these trading competitions as well. Real money. That's all real money, gang. Those of you that have like the Infinity platform recognize that. That's the DAX, crude oil, Russell stock index future there. Really great stuff. And also, I'm really proud to say that not just on the trading side, but on the business side, in 2015, we are the only company in the trading education business that was voted to member favorite by American Express members. So that means American Express customers, so the top customers in the world in the credit card side of the business, voted us as member favorite. That's pretty darn cool, okay? So what we did was I got together with Steve, tried to make this really nice offer and opportunity for you guys to join us. And what I have here is I talked about one strategy tonight. I also alluded to two other strategies here this evening. I kind of pointed to on the charts. And so what I did was I put together a package for you because we had an hour together tonight. So what I did was I put together a package that I recorded over the course of a year. It's actually broken into 3 different parts using different types of indicators, and I gave you the settings for the main indicators that you need there to go ahead and use it. So you guys will all have access to be able to use it in your platform. And so what it is, it's a 3-part video series that goes ahead and includes entries, exits, profit stop management, and the settings for the indicators I use to identify the setup. It's also specifically helped me make thousands of dollars in the trading competitions. It also went ahead, this was trades we actually took yesterday with this strategy. In fact, a couple of my trading students actually had a public trading competition with each other and using my strategies. John Dabrowski went ahead and actually made $960 in our trading room yesterday morning, and the core strategies that he was focusing on was the strategy included in the video that I'm going ahead and offering you there for only $97. It's basically, I'm giving it to you for virtually free as an ethical bribe to get you guys to realize that, hey, as Steve said, I win these competitions, and so I know some things that you need to know. And so John went in yesterday morning during the competition, made $960 in his live real account, gross profit. Then Colorado John, who was trading against him, went ahead and made $980 gross profit. So John bested him by $20, and of course I did all my trading live there on the screen in the trading room as well. So it was a lot of fun. Everybody watches, and the core strategy, in fact, you could see some of these strategies that were used yesterday were in this video. So what this course includes, all right, this course includes 1 conservative trade, 1 aggressive trade, the specific entries, exits, stops, and profit management techniques to help you find the same award-winning entries that I use in my personal trading in the trading room. Some of my students, as you just saw, those were live real money results that they're making. And yeah, thank you very much. I appreciate those great comments. And so what this is designed to do, Joseph, is help you in your personal trading plan to find whether you're more conservative, whether you're more aggressive, find the trading strategies out of my work that are right for you and your trading plan. And what you can do is go to becomeabettertrader.com/win. Becomeabettertrader.com/win to go ahead and get access to that. It's also going to be for intraday and end of day. So whether you like to do like what I like to do with these intraday trades, win these trading competitions, do this in my live trading room, live right on the screen in front of people, or whether you're a swing trader and want to use this on daily and weekly charts, this is for you because it's going to include the full-time trader strategies to help you get a lot more trading opportunities, and it's going to include the part-time swing traders and options traders that have to set up their trades remotely because of the fact that they still have full-time second careers. Everybody's got to start somewhere, and so I want to give something for everybody that regardless of whether you're already a full-timer like myself or you have a part-time trading passion because you have a full-time career. So it's for both. All right. It also gives you instant access to the video course. So you could start tonight as soon as we're done here. You can start tonight. It gives you the indicator settings that you need for the strategies. It gives you the ideas and strategies that I don't share publicly with people. And that's basically so you can hit the ground running right now and be ready for an awesome April and a great rest of the 2016. Gang, my equity curve here in 2016 is absolutely phenomenal. If you're in my trading room, you already know that. You're not going to have to use proprietary indicators for this. I'll give you the settings that you need for this strategy. And basically, this is designed to help you give you an advantage over everyone else. So you take the work that you get from Steve. You can add in all my work. It's very complimentary. And this will also give you a whole other sounding board of work. So it's a great 1-2 punch to help you. All right. And so you go to becomeabettertrader.com/win. And like I said, this is my equity curve during the trading competition in Italy, but it's also my equity curve here in 2016, so phenomenal. Again, this strategy specifically, I had 18 trades. I made $4,837.20, during this trading competition. And this trade setup that I'm giving you here, not only was it great for yesterday's, you saw my students trading against each other, and the profits that they made with real money yesterday. And hey, look, trading involves risk, not just reward. And I'd share that with you right from the outset today. But this is a strategy I use quite consistently, quite regularly in my trading room, and used it several times yesterday morning. We did it between myself and my other students. I just showed you some of their actual profits from yesterday. This trading competition, here in France, it was specifically one of the ones that gave me a lot of the profits from this event. So what's great is I've got this proven track record here of these fantastic wins all over the world. I also use this strategy right there for all of you that were live with me at the competition in Orlando a few weeks ago. You actually saw me use these strategies there as well. So $97 I'm giving you, and like I said, I'm basically giving it to you for free because I want you to see, as Steve told you earlier, I'm the real guy you should be learning from. I win these competitions. I'm a real trader. I don't just talk about trading, and I want you guys to see that, okay? So again, it's 2 setups and strategies there, regardless whether you're a full-time day trader, a part-time swing trader, whether you're an aggressive trader, a conservative trader, it's all designed for you there. Yes, it does work at Forex. In fact, I actually showed a Forex example from earlier there. The Japanese yen was featured in one of the charts there earlier as well. So yes, it's becomeabettertrader.com/win. And yeah, absolutely, George. Great question. George says, does your settings work on a non-TradeStation platform? Yeah, exactly. I mean, this will work on any trading platform, unless you're using some sort of like really crazy free platform off the street, like, I don't know, freecharts.com, and even then you can usually customize those settings a little bit as well. But if you're using any standard platform for any normal charting company, absolutely, it works. I haven't had anybody that hasn't been able to use it yet, so it shouldn't be a problem. MT4, of course, wonderful. Hey, absolutely, Matt. Thank you very much. Let's see. Do you scan for stocks that have specific traits that can be used with this? Basically, what I personally, Kieran, like to go ahead and have volume in my stocks. Usually, I like to look for stocks, personally, that have at least 500,000 shares a day, but really 1 million shares or better. So that's kind of what I like to look for when it comes to equity trading. And really, in the big picture, I look back to when I was trading equities, even back in the 90s. I usually looked for 1 million shares plus. I like liquidity. You know what I'm saying? Okay, give you the setting. You'll be able to go ahead and set it up real easy because everybody's got different platforms. Schwab, TradeStation, Sierra Charts, Toss. Everybody's got different platforms all over the place. Thinkorswim, Interactive Brokers, everything. So we give you the settings so you can put it up on there. MT4 exactly there, and great, good. Karen says I get your nightly videos and really find them helpful. Yeah, and so of course that's a great thing for you guys to have access to as well. Yes, Options House, no problem. You can adjust those. Hiron says I'm in. Okay, Steve put the link up there as well as Becky. So good, guys. I'm glad that's making sense, and I'm glad that's helping. What other questions can I answer for you? I want to try to go ahead, and this is a great opportunity here. Not just this offer, of course, but just having access to somebody who really trades. That's a big deal. So I really want to make sure that we're here trying to help you there. And of course, go to becomeabettertrader.com, get access to those free nightly videos. That's right over here. gang. You can get access to those as well, but there's no substitute for, obviously, having access to actual setups here, to be sure. Okay. Yes. Well, the videos there show you. Yeah, I give you the settings there. I show you how to set that up. So that's not a problem. And I got a great team, a great staff. Well, obviously, as you guys saw it too. Talking about my staff. I mean, our customer service is clearly next to none. I mean, we were voted 2000. We are the only company in the trading education space voted 2015 member favorite. We were just awarded that late last year there. 2015 member favorite by American Express, the most discerning customers on the face of the planet. We were voted 2015 American Express favorite. So not only do I win trading competitions around the world, which is great for you because information that you guys need, but then the customer service experience, I got a superior customer service staff there. They just really want to help you guys be as successful as possible. So I'm pretty proud of that too, as you guys can imagine. Okay. Karen says, have to say your staff is great. Yeah, thank you, Karen. Does the inventory retracement bar have to be broken within a certain number of bars? Yes, it does, RJ. It needs to go ahead and be broken within within the 20 bars. Within the 20 bars. Okay, that's really the preferred thing. So are you saying any time frames will work with the 45% setup bar? Great question, Matt. Basically, it needs to be typically 2-minute bars or higher. So I don't care what you use it on as long as it's 2-minute bars or higher. I don't use it on 1-minute bars, okay? I want to use it on 2-minute bars or higher. CB says, I'm in, thanks. It's great. So 2-minute bars or higher, 2-minute, 3-minute, okay? Typically, I use in my trading 2-minute bars, 5-minute bars, 15-minute bars, hourly and daily. So I've used 5 charts, 2, 5, 15, hourly, and daily for my intraday trading. For my swing trading, I use daily and weekly bars with the same exact strategy. Okay. How long have I been trading candlesticks? Since Christ was a corporal. Basically, I've been trading candlesticks since day one. I have never been open, high, low, close bar only. I've always been candlesticks since the very beginning of time. Even when I was a 15, 16-year-old kid, I was trying to look at any charts I could with candlesticks. It just visually, it is so much more appealing. And so I'm 100% with Steve on that. The candlesticks is visually, you give me an open, high, low, close chart and I'm lost. It's candlesticks for me, okay? Let's see, I'm trying to go ahead and keep up with all the questions, gang. Thank you for all of them, but just bear with me for a second. Who are some of my mentors? I didn't have mentors, Doug. Unfortunately, I hate to say it, but I was learning to trade in the 90s. So who did you have out there? Guys like Wade Cook, right? And a whole bunch of these Dewey Cheatham and Howe educators that have all written books back in the 90s. So basically, they picked some of these guys. They wrote some books, and I look at those same people today, and they'll still do some public events, and of course, nobody even knows who they are anymore. They'll get a handful of people showing up at their things, but basically, they don't trade. They're trying to live off of yesteryear. They'll never go up against me in a trading competition because they don't trade live. They just talk about the markets these days. So I didn't have mentors. So basically, then that's what I'm trying to say to you. I want to be the mentor to you guys I didn't have, right? I worked 2 full-time jobs, a part-time job. I was raising that wonderful son of mine, God bless him, as a United States Marine, helping to try to keep some order to the world we live in, and trying to learn to trade. I didn't have a Rob Hoffman to help me. So, but I am trying to be that person to you that I didn't have. Can this be set up in the toss charts? It absolutely can be set up in the toss charts. Repeat the intraday chart timeframes again: 2-minute, 5-minute, 15-minute, hourly, and daily. Yes, the link again is becomeabettertrader.com/win. Becomeabettertrader.com/win. Oh, I see Jim posted it in there. Hey, Jim, thank you so much for your help. Let's see. Are all your trades in the live trading room day trades, or do you do swing trades in the room as well? No, in the live trading room, I want to open and close my trades before the trading room closes for the day. So I don't do swing trades. I have my premium nightly day trading and swing trading videos where we focus more on the swing trade concepts, well, on the day trade ones for the day trade concepts. But the executions I'm taking in the live trading room, I want people to see exactly how much money I make before that room closes. I'm sorry, gang, but most of you here have been in some sort of person's trading room before where they take a trade, you know darn well it's a losing trade, and you never hear about that trade again, do you? You never hear about that trade again, but you know darn well that trade was a loss, and you never hear about it, right? So so the bottom line is, in the interest of full disclosure, I want to go ahead and I want to close out my position so you know exactly. Like, yesterday when we closed out, people got to see my P&L. They got to go ahead and see the P&L of my students that were in their trading competition with each other, right? And so so like here, this was yesterday, right? $960 from John Dabrowski, $980. These are gross profits there. From Colorado John there. They got to watch that P&L, right? They got to watch me execute the trades live on the screen, and then everything was closed out before the room, so they got to see my exact profits, no questions asked, and so profit, loss, it's all done on the screen. So, of course, I'm not taking swing trades in that environment because then you don't actually get to see them close out. So I like to be very transparent with those profit and losses. I've seen and heard over the years all these educators who take trades either on simulators or they'll take a trade and you know darn well it's a loser. You never hear about it again. So in the interest of full disclosure, I like to take the trades and close them out there in there. Okay? And let's see here. Okay, as far as my trading room, gang, for all of you that are asking about the trading room, do me a favor. If you just send me an email, support@becomeabettertrader.com, support@becomeabettertrader, or call us. And by the way, you can see the telephone number. My team is here with me right now. I know that they're all on the phone right now, it looks like, but go ahead and call anyways. And you might get me, because as soon as we're done with this, I'm going to go ahead and get on the phone as well. 847-235-6131. 847-235-6131. You can call us as well if you want to, get access to this course, that way. And as soon as we're done here, I can see everybody's on the phone, I'm going to go ahead and start answering phones too. So you might get me personally. Let's see. As far as the account size, you can go ahead and with various brokers, like a $10,000 account, like you're asking about there. Some of the brokers have $500 intraday margin. That could theoretically be as much as 20 contracts you'd be trading. That's a lot of size for a newer small lot trader. But and then for some brokers, that's only going to be the equivalent of 2 contracts. But either way, when you're trading, 1 or 2 contracts, that could still add up very fast. As these guys who are here trading these guys will tell you, in fact, you can see both of them had their contract size set to 2 contracts. You see that? 2 contracts here for John Dabrowski, and 2 contracts here for John Norton. So both of them, Colorado John and John Dabrowski, both had them set to 2 contracts. So with a $10,000 account, you can trade 2 contracts. Okay, you need to consult your registered financial representative, make sure it's right for you, but you can go ahead and do those. So the Don, I use multiple brokers. Yeah, great. So Max, so what that swing trader course is on the back end of that, that's like a 5 or 6 hour course that I did, and that's what it's talking about. That's specifically geared really to my swing traders. The setups can be used on an intraday basis, make no mistake about them, but it's really geared towards my swing traders is what that course is. That's a great course. It's like a 5 or 6 hour class that I did, and I'm really proud of that. I get a lot of rave reviews about that class. And please repeat the phone number again. No, you got it right, John. It's 847-235-6131. Yeah, it's right up here on the screen, too. Absolutely. Yeah, give us a call. It looks like everybody's on the phone right now, and as soon as I'm done, I'm going to start answering phone calls, too. So like I said, you might get me personally in a few minutes. Okay? No, the half spike and the full spike. The half spike and the full spike, John K. let's see, what broker are you trading through? So I trade through lots of brokers. My equity and my wealth is spread after the whole MF Global and PFG. After those companies went boom, I made sure that my money is spread. Plus, I trade options, equities, forex, and futures. So I have different accounts with lots of different brokerage firms. So yeah, if you need a broker referral, Don, just email me at support@becomeabettertrader.com, and I'll get you a referral there. And let's see, the link. Yeah, the team could probably put the link in there for you again, Ali. And thank you for being here. Yeah, it is 1:15 a.m. Good Friday in the UK. I appreciate you going in and being there at this hour. So thank you very much. Very kind of you, and I appreciate all the great questions too. The inventory retracement bar strategy is what I shared with you guys earlier. Okay. Yeah, Anna. So if you have questions about the live trading room, just send an email to support@becomeabettertrader. Just give me your name and telephone number, and I can call you and talk to you about that directly. Yes, Don, he's perfect. Patrick Z is wonderful. So he's awesome. So in my humble opinion, stay with him. But Anna, yeah, just go ahead and send an email over to support@becomeabettertrader. Or like I said, if you call in a little bit, you might actually get me. But you'll leave your information, and I can give you a call back and tell you all about the room. I just want to keep focused on this really great opportunity because for virtually free, you get all these multiple setups. It was shot over the course of a year. It's a 3-part video course, okay? And so I want to make sure that you guys get this, okay? And do I have people with full-time jobs in my room? You better believe it, RJ. A ton of my people. So the core people that are in my room are basically medical professionals. That's nurses, doctors, anesthesiologists, surgeons, oral surgeons, a lot of medical professionals. They're also engineers and self-employed people. They tend to go ahead and be very educated individuals. A lot of them, as you can see, are American Express card-carrying members. They're highly educated. They know what they want, and they want the best. And like I said, we actually won this wonderful award, which I'm extremely proud of. That I was sharing with you there earlier, the American Express Fan Favorite Award for 2015 here. So I'm pretty excited about that, as you can imagine. So they're highly educated, really intelligent people that know what they want, and they want the best. And there's nobody else in the entire world. That has won 17 domestic and international real money trading competitions. I'm the only person in the entire world. I'm the only person. And what that means is I have knowledge that I need to be able to give to you guys that you need. Okay? And I want to start that relationship by giving you this incredible offer, for only $97 to go ahead and, so for basically free, you get a chance to take a chance on me and see why I'm different. And yet what's nice is for all the work that you have with Steve here, it'll still tie in great, as you'll see. I've seen Steve's work. Steve's presented to my group. I've had dinners with Steve. Steve and I have presented at different events together from Metastock and other places. I know Steve's work, and my work will tie in very nicely with Steve's work. So you're not going to have to deviate from Steve's work to go ahead and benefit from mine, which is really what's great. Yes, I have. And Chuck's a great guy. He has not won anywhere near my number of domestic and international trading competitions. He's won like 7 or 8. And I've won 17. So, but either way, that's okay. Chuck's a great guy. So let's see. A Metastock plugin. I do have a Metastock plugin out there, and if you have Metastock, this strategy you're going to very easily be able to plug in just fine. Okay. So the package has 3 videos. Right? That's correct, Kay. Okay, so I'm just continuing to answer questions here. Rob, I just spoke to Marissa. This is from Sam. Rob, I just spoke to Marissa of your team. She is very helpful. Happy Easter. Steve Bigelow, thank you for introducing to Rob Hoffman. Happy Easter to you and all. Well, thank you, Sam. That's very kind. And yeah, I'm really proud. I got such a wonderful team. They're really awesome people. As you'll see, if you call in, talk to them, or talk to me tonight, that's how we won that American Express Member Favorite Award. Nobody else in the entire entire trading education space won that award. I'm the only company. I'm the only company as a 17-time domestic and international trading competition winner. What does that mean? We have things that you need, and I want to give them to you, and I want to start off a great relationship with you and build upon what you've learned from Steve here. Okay, so it's a handful of hours there, Kay. So it's $97, gang. So a handful of hours is awesome for $97, giving you real money strategies I've made an incredible amount of money with in these trading competitions and that, as I just showed you earlier. So it's a fantastic value. Let's see. Karen says, Marissa gets right back to you. Good experience. JP says the strategy you're selling for $97 is one of the ones you use to get the 17 awards. I promise you, I completely certify, yes, it is. It's the same strategy that my group yesterday went ahead and was using to make some fantastic profits yesterday. So it's real. So the reason why I'm doing that is once you realize, wow, this guy's actually the real deal. Okay, as Steve told you earlier, he specifically said, Rob is the real deal. That came from Steve. So if you trust Steve, then, and you understand that I've won all these competitions around the world, I have information that you need. Okay? You know what, JP? I just did. This entire event, I showed numerous examples. I showed video examples of several of these trades in action as well. Okay. Well, Dean, look, it's $97. So hopefully, today, tomorrow, you can do this. I'd like for my team to be on duty to support you. So if you do it on a Saturday or a Sunday, the team won't be here to support you. And so I'd love for you to do it while the team is here to support you. Kay says, okay, I trust Steven. We'll get it. Steve can come back in here and share his own thoughts about me. He knows I'm the real deal. So, he said it at the outset. He can tell you at the end there too. Okay? Yes, you can use a JP on Forex. And I actually showed a Forex example there earlier. Okay? So I've tried to answer the questions, gang, whether it's about strategies, whether it's about the offer. The bottom line is it will absolutely, Armin, work with Thinkorswim. You better believe it. Absolutely. Okay? trader.com/win. becomeabettertrader.com/win, or you can call us here, and I'll still be here for a little while answering calls as well, because it looks like the team's constantly on duty or answering all these calls here, so I'll be here as well. So go to becomeabettertrader.com/win and get yourself taken care of, and we'll look forward to taking good care of you like we did with all these American Express clients who voted us member favorite, the only company in the entire trading education space that was voted this fan favorite. That's pretty awesome. Okay. Yes, I do. I love to teach futures to people as well as stocks, options, and Forex. So yes, if you've never traded futures before, I'd love to be able to go ahead and teach you futures. It's a specialty of mine. I love it. Okay. Max says, great presentation, usually on get in late. Glad I was on time tonight, karma. So, Max, thank you. I'm glad you were able to make it on time, and I hope I answered all of your questions and everything made perfect sense to you as well. So thank you. Thank you, Steve. Very kind of you there. It is Bill. Bill says, thanks for a very unique, powerful analysis. I hope this makes a lot of sense. Armin, no, of course not. Everybody is unique and individual. And just remember, Armin, trading involves risk, not just reward. I always like to remind people that because people see my, things that I do and these trading competitions. They watch me live at these different traders expos, these money shows, these international trading competitions, and so I want them to realize trading involves risk, not just reward. I like to keep it real. Okay, again, if you want to put in the link maybe one more time since people are asking about that, becomeabettertrader.com/win. Hopefully that will help take care of you there. And so, again, I hope that answers all your questions. Thank you so much. And yes, thank you. Happy Easter to you guys as well. Thanks for being here with me, on this special weekend. And, like I said, if you guys see me next week or you guys watch my free nightly videos, you go to becomeabettertrader.com for that. You'll get the announcement on my baby, whether it's a baby boy or a baby girl, since we got the big announcement coming out next week. So I'd love to have you guys as part of that. The next competition is going to be a Las Vegas Money Show in May, and also I've got an international competition over in Italy in May. So those are the next competitions. All right, I've been invited to several throughout the year. I'll be in Toronto doing an international one. I've got more in San Francisco and other places around the world later this year. Okay, people are inviting me all over the year to trade against their top traders, and so it's a lot of fun. Thanks, gang. Happy Easter to you guys too. You guys are awesome. Steve, thanks so much for having me tonight. Your people have been really wonderful to me, and I tried to answer every question they had. I don't think I missed a single one. But Steve, I'm going to give you the last words of the evening. Because it was nice to go ahead, and I will be careful traveling overseas. I'm always very conscientious of that. But thank you, Don. Thank you for looking out for my well-being. I appreciate that. But Steve, if you want, you're welcome to say the final words to the group. Since you had such a wonderful group here this evening, or I can just close. However you like to do that.
All right, Rob, thank you very much. This is very good information. And the difference in Rob's information, when I usually get done with a presentation, I usually tell people, if you overlay candlesticks on whatever trading system you're doing, it's going to improve it that much better. But Rob goes the other direction. If you know candlesticks, Rob even fine-tunes it even more so that if you want to trade successfully, he's already developed the indicators to show you where your high probability trades are off of candlestick signals. So for $97, you can get one guarantee. You're going to get a heck of a lot more than your money's worth, and probably information that you're going to be able to use for the rest of your life. So with that, Rob, thank you very much. This was good stuff. And hopefully we'll see you in Las Vegas again soon. And everybody, have a good weekend. We'll see you in the chat rooms.